Howdy who, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, we're made it to the month of January, right? It's the new year. Everyone's optimistic. Everyone's excited. Good things are going to happen. It's going to be a wild year, right? Well, for the stock market, I'm a little bit concerned, though. You see, you have the IWM, which is the small caps. Now, the small caps topped out back in November. Now you have the Dow Jones Industrial Average. Dow Jones topped out in December. Now we're in the month of January. Now maybe we get another run up in the S&P. Maybe we get another run up in the NASDAQ so they can top out in January. But the small caps, the Russell and the Dow Jones, they've already topped out. We're coming down. We're coming down. We're at the start of the bear market. Now granted, you got the NASDAQ. If the Nvidia continues to make new highs, maybe they can push that up, but it's going to be very difficult without Nvidia participating. I think that S&P could have another run up here and maybe make a new high, but it's going to top out in January and then we're going to start coming down. Now we've had the first trading day of the year yesterday, right? And it was a down day and a lot of people get concerned. They have a lot of sayings. If the first week is down, the year's going to be down. There's a lot of superstitious to the stock market, but I do think the stock market is in a lot of trouble here. Now, why do I think that? Well, you got the president, you got Donald Trump out there calling for a Great Depression. Now, of course, he's blaming Biden for what's coming, which is going to be a Great Depression, according to Donald Trump, right? And he's going to blame Biden and Biden's going to blame Trump. And they're both responsible for it because what it really is just spending of money, right? Just the printing of money. The government spends too much money. Now, it's fascinating. I say I can prove we'd already be in a Great Depression if we didn't print trillions of dollars. Now, you go back just to 2020, we printed $15 trillion in the last 4 years. You take that out, right? Now, they say that the GDP has been going up about 3% a year, 3%, 3%, 3%. You take out that $15 trillion, and what's really been happening is GDP has been going down 6%, 6%, 6%, 6%. We'd already be in the Great Depression, but we're postponing it, and we're going to have a meltdown. The Donald can see it coming. It's the last gift that Joe Biden's going to give us. He's going to give us the Great Depression, right? Okay, now a lot of people don't believe this. A lot of the moon boys think that we have modern monetary theory where we can just print money and it doesn't matter, and we're just going to keep going up and up and up. That would be what's known as a crack-up boom. That's what us Austrian economies call a crack-up boom, right? We could have an inflationary depression. Now, you see, people say that we're going to get to deflation first and prices are going to start to come down. Well, when you see the stock market coming down, when you see houses starting to crash, what's the Fed going to do? They're going to print money, right? And the Donald's going to be in charge. Now, he's a good bankruptcy president. He wants to be a Bitcoin president. Maybe Bitcoin can save us, right? We're going to get the Bitcoin reserve. He's going to trade all of our gold for Bitcoin. Stupidest thing he could possibly do. Maybe he could take the gold and back the dollar, make the dollar strong again. Instead of threatening all the BRIC nations, right? He threatens them with 100% tariffs if they don't accept the dollar as payment. You see, you shouldn't have to threaten people to use the dollar. If the dollar were strong, people would use it automatically. And that's why you see the purchase of gold right now. Everybody's buying it. Central banks are buying it at a record pace, right? I mean, a lot of people say we're going to Bitcoin, but I don't see the central banks buying Bitcoin. Why? Well, because they don't need it, right? When the reset happens, what are you going to reset against? You're going to reset against something that's real, something that has real value, real money, gold and silver. And that reset will happen. It's inevitable. But first, we'll get that deflation coming. Then they're going to print money into oblivion, which is going to send things into the stratosphere, right? Now, we're already seeing this. Okay, look, Okay, let's talk about this past Christmas, right? Okay, you got credit cards, right? Credit cards are at a record high, record high, record high. 36% of people that they polled went into debt to buy Christmas presents, okay? They didn't have the money to pay for them in this booming economy, so 36% of people went into debt. Now, 2 out of 5 people that have credit cards have already maxed them out. They're maxed out. They're trying to get more credit cards, but there's more rejections now. Why are there more rejections? Because there's more delinquency. The banks are seeing the delinquency rates skyrocketing, so they're not issuing new credit. They're starting to pull back. They're starting to say, no, you can't have any more credit. You've maxed out your cards. Now, these people that have maxed out their cards, they're just like our government. They don't have any intention of paying their debt back. Why would they pay it back? They can't, right? Just like our government. Why would they pay it back? They can't pay the debt back, right? Well, I suppose they could print the money, and that way they could pay the debt off, right? But then the money's not worth anything. So it's really a default either way. Well, these people that have maxed out their credit cards, they have no plan to pay them back, right? Now they have these new programs, buy now, pay never, right? Pay later. But the people that are using them are the ones that have already maxed out their credit cards. Now, if they can't make their credit card payment, I'm pretty sure they're not going to be able to pay later when they use these buy now, pay later programs. It's really sad because a lot of people are using these buy now, pay later programs to buy the essentials, to buy groceries, to heat their home, to put gas in the car, make, standard payments that they need to make. They're just normal living expenses, right? Nothing luxurious, but you see what we have is 2 different types of economies. Now, when you print money into oblivion, you make the top 10% very rich. Why? Because their assets go up at such a fast pace. And we've seen that in the stock market the last 2 years, right? 25%, 50% just in the last couple of years. Let's say you had $1 million portfolio. Let's call it back in 2020. You had $1 million portfolio, right? Well, that's turned into $3 million now. So you're feeling rich, right? You just made $2 million. You don't need that money, so you got a lot of money to spend. You're looking at all these people like, what's so bad about the economy? I just made $2 million in the stock market. And that's great. And maybe you want to take some of that off because I don't think we're going to have another 25% up here. But for the top 10%, this economy is great, right? But you see, the Fed, they've run into this rock now, between the rock and the hard place. They can't figure out how to keep their friends rich by printing money and bringing rates to zero, at the same time keeping inflation low, keeping the banking system going. You see, the banks are going to start to fall over. And the Federal Reserve knows this. They've raised the rate up to 5%, and Silicon Valley Bank was the first one to go down. We've had 4 or 5 other ones. You watch 2025, it's going to be a great show. Get the popcorn ready, right? Sit back, watch the real estate market. Oh, it's already starting to happen. Look at real estate prices in a lot of areas are already coming down. Let's just say you bought $1 million house in Austin, Texas. Well, you already lost $200,000. It cost you another $100,000 to get out of it. So $1 million, you put 200 down, 200,000's gone, right? It's already gone. Same with San Francisco, right? I live in the South Bay. San Francisco's up here. They're already down 15%. Now, if you want just a Cracker Jack home style box home, I mean, it's very simple, right? I mean, a little track home, 1,200 square feet, maybe only 1,100 square feet, $2 million. $2 million. But here's the thing. Let's say you bought that $2 million home, right? And you had to put, 20% down, right? Let's say you put $400,000 down. Okay. Well, that $2 million home has already lost $300,000. It's going to cost you another $100,000 to get out of it. So you can walk away with no money. You've lost your $400,000 already. Now you say, but Mike, this cannot possibly happen in my area. And that's probably true. You live in a great area. Nobody dies. Nobody gets divorced. I mean, and nobody loses a job. It's a really cool area. area, but I'm telling you, it's coming to an area near you. And that creeping crud is going to creep over into your neighborhood. It's really scary what's going on right now. Now, Donald Trump, he warns us the Great Depression's coming. And he's got to warn us because right now he can say that Biden guy, that Joe guy, he's the one that gave us the gift of the Great Depression. And he doesn't want to take responsibility for it. He's going to get blamed. Don't get me wrong. He had the 4 years before Joe, and he was spending like crazy. Now, Joe did outspend him right at the end. He got the lead, and he outspent the Donald, right? And Donald's going to outspend probably his term and Joe's term because he's going to have to print the money to get us out of this thing. But you can't get us out of this thing because money printing is not doing any good anymore. You used to print $1, you got $3 of GDP, right? You got an added advantage. Now you print $3 and you get $1 of GDP. There's no point in printing anymore, and you can start to see this. You can see it with the economy. Economy is great for the top 10%. But look at the bottom half, the wealth gap's really incredibly extreme right now. It's almost 70% that are living paycheck to paycheck. They don't have money in the stock market. They don't have money in gold. They don't have money in real estate rental properties. They don't have that. Those are going up. What they have is a paycheck, and that paycheck is not buying as much. When they go to the grocery store, they don't have any food, can't buy enough food for the family, so they have to go buy now, pay later. And this is really sad, right? But these credit cards, let's talk about them a little bit. All right, so they're at record amounts, right? But here's the interesting thing. So are interest rates. Interest rates on credit cards, I heard the average rate's like over 20% now, up around 23%, right? Okay, well, they have this thing in California, which is kind of funny. It's called usury. Now, most states have this. I'm making a joke here. But usury is 10%. Above 10% is usury, right? But credit cards, they're an exemption, right? They're an exemption because banks are exempt from usury laws because they make the loan. So they have an exemption. They can charge anything they want. Just like a real estate broker. If I make a loan, I can charge any amount I want. For some reason, we're exempt from usury laws. But here's the thing. There's actually a plan out there to go back and make usury laws be enforced, right? To where a bank cannot charge more than 10% interest on a credit card. Now that sounds great, right? Except for one problem. One problem. You see, you would have to qualify. All the people that need the credit cards can't qualify, and they would be cut off. They would be homeless. They would be out in the street. They would not be able to get food because they would not be allowed any more credit, right? If you applied usury laws 10%, made credit cards 10%. Well, that's going to take away 2/3 of the population from being able to get a credit card. There's a little problem there. So if that law passes, it's just like a death sentence to the bottom 65% of our nation. And those bottom 65%, they will go hungry. They will become homeless. And the homeless situation, it's doubling. It's doubling. People say it's only up 20% year over year. In my area, I'd say we're up 100% easily. Everywhere I go, I mean, they're just camping out on the streets, right? I mean, city camping. Maybe it's a new thing for the kids. Just pitch your tent on expressways. It's pretty wild, right? I mean, I just driving down the expressway and you just see tents everywhere. I guess that's the new way we're going to live. We're going to hang out in tents for a while till this thing resets. And it's going to reset. Now, don't fear the reset. What you should be doing is getting some real money, some gold, some silver. Look, silver's cheap. It's below $30 still. That's going to get you through the reset. You don't need that much. You don't do what you can. Maybe you buy 1 ounce a week, $30 a week. Maybe you can go mow your neighbor's lawn and he'll give you $30 to go buy 1 ounce of silver. It's a smart thing to do right now. This is just Tall Mike's advice. You do what you got to do, but I think that silver is the cheapest asset on the planet. And when the reset happens, I think you're probably going to see that stuff 10x because they're going to reset it against real money. Right now, real money is being manipulated lower and lower, right? I mean, gold, it's at a record high, but it's the cheap also, right? I mean, okay, you see gold right here about 2,700. All right, what's the S&P at? Let's call it 6,000. Okay, 6,000. Normally gold trades about 1.5 to the S&P, so it should be up here at 9,000. Or the other alternative, guess what? S&P could come down here to about 2,000. I suppose that's a possibility too. Then gold would be sitting about right if the S&P drops to about 2,000. But right now, gold's extremely undervalued. It should be trading holding up around 6 to 9,000, but they don't want that, right? They want you in the Bitcoin. They're letting the Bitcoin run because it keeps gold down, right? And they keep the gold down with the COMEX exchange, with the London exchange. They short it. It's called paper silver. It's called paper gold. 400 ounces of paper silver for every 1 ounce of real. About 200 ounces of every paper gold for every 1 ounce of real. When the reset happens, they're going to realize they're not holding silver. They're not holding gold. And those 1 ounces that are real, they're going to skyrocket. This is just my take. This is just what I like talking about. If you like talking about this stuff, give me the thumbs up. It's the new year. Going to be a bumpy road, but it's going to be interesting. Going to be a lot of fun. Punch that subscribe button. Get out there, everybody. Have a great day, and we'll talk again real soon. Bye-bye now.